Hey, Big Eve, can I borrow 20 bucks?
Yeah, sure. Sign this.
It's only $20.
With 8% interest, compounding monthly, payment due in 30 days.
I'm not signing that.
Then I'm not lending it.
Yeah, dude, you're insane.
That's peer-to-peer lending, baby. Peer-to-peer lending. It's when regular people lend money to other regular people, cutting out the bank entirely. Think of it like Uber for loans. You're not getting a loan from Chase, you're getting a loan from Chase. You know, your Pilates self-defense instructor, who, had an extra $5,000 laying around and wants a better return than savings accounts. Platforms like Lending Club or Prosper connect borrowers with lenders. Borrowers need money, lenders want interest. The platform takes a fee for the matchmaking, and everyone should win. Keyword, should. Here's how it works for the lender's side. You put money on the platform, they spread it across multiple loans, maybe 25 here, 50 there. You're not giving one person 10,000. This is diversification, diversifying your assets. Borrowers make monthly payments with interest, and you collect that interest as profit. Sounds great. Passive income, helping people, better returns than a CD. Except people default a lot, meaning they stop making payments on the loan. You see, you're not lending to people with perfect credit. Hell, some of them might not even have good credit. You're lending to people that the banks probably already said no to, which is why interest rates are high. You're taking on more risk. From the borrower's side, peer-to-peer lending can actually be solid. If your credit is decent but not great, you might get a better rate than a credit card. No awkward meetings with the bank loan officer, faster approval, money in your account within days. But if your credit is bad, those interest rates can hit 25, 30%, sometimes even higher. At that point, you're just trading one expensive debt for another. And here's the kicker. The platform doesn't care if you default. They already got their fee. The lender is the one that's eating the loss. So if you're borrowing, read the terms. And if you're lending, understand you might lose money. Peer-to-peer had a moment back in 2010. People thought it was going to replace banks. It didn't. Banks are still here. Peer-to-peer platforms, not so much. Some are still running, but with way more regulations and far less hype. So peer-to-peer isn't a scam. It's just not the revolution everyone thought it was. So if you're a lender, treat it like a high-risk investment. Don't put money in that you can't afford to lose. And if you're a borrower, make sure you can actually pay it back. Just because it's not a bank doesn't mean it won't wreak havoc on your credit. That's our show. Thank you so much for watching. And remember, lending money to strangers on the internet can be profitable, or it can be an expensive lesson in human nature.
Yo, Big Eve, you still got that $20?
Yeah, just sign the form.
Never mind.
See? That's what I call risk management.